Welcome to the Stock Option Assassins free trade of the week. My name is Eric, and in this week's edition of Trade of the Week, I want to focus on the S&P 500 and the toppy nature that I've been seeing from last weekend into today. And if you haven't done so already, be sure to subscribe to our YouTube channel for more technical analysis of stocks and ETFs. And so what we're looking at right now is the SPY. And I want to zoom out just a little bit. And we've had this big kind of correction here in kind of September, October, and we kind of rallied back up. And I want to kind of look at the pattern we're putting in right now, compare it to the last couple sort of sell-offs that we've seen, significant sell-offs. So we had this one back in July. It was relatively minor. I think this was maybe a 5 or 6% move. This was a bigger 9-10% move, and now we're kind of teetering on that. And what I want to focus on in this video is just some analysis here of the DMI oscillator. And this is a great tool for kind of identifying divergences and sort of momentum and things. And I want to go back to this to July, where first of all, let me zoom over here. So the market itself during that time had been, continuing to rally, was starting to get, choppier. It moved up, pull back to the mean, kind of retest the highs, the upper band there, retest the highs, come up. And then it started to kind of, not be able to reach the band. The band started trading sideways. And the other thing you had was you had this multi-divergence here where we kept making new highs, but the oscillator kept making new lows. And this is the point that is very important when you're talking about divergences, whether it's bullish or bearish. And with the DMI oscillator, that point is when it crosses below zero. What that's indicating is that the buying pressure really is starting to give way here. Typically, the zero line is kind of a support area. You can see we came back in. This level was around 6 or 7, kind of rallied back up, and then the zero, and then eventually it got, kind of cracked it, came back up, sort of retested, and then ultimately rolled over. We didn't actually get the big sell for another week or so, but you can see when the stochastic aligned with that, we retested the zero line, and that's really what started this big move down. And then a similar thing happened, back in, here we go, September, where the market was kind of starting to make new highs, but the oscillator started to roll over here. And I just want to say that just because a stock or ETF trades sideways and the oscillator rolls over, it doesn't necessarily mean you're going to get a sell signal or you're going to get a big sell-off. It just means that the momentum has stalled. What I really look for is that crossover, cross back up, and then the sell signal. And then that's what we're kind of looking for. And this was a huge dump there. So what we're looking at right now is something very similar. It's kind of riding the upper band. And I know we didn't do a trade of the week last week, and here's why we did not do a trade of the week last week. So first of all, 2 weeks ago, the market had actually broken out, was trading sideways, very bullish manner. And then on Monday of last week, we had this dip. We filled the gap, and that really kind of threw me off in the sense that I was not expecting that gap down because of that bullish nature. And we actually ended up rallying back up through the end of the week. But then today, same thing, we had another drop down. And this time we're getting dangerously close to sort of crossing the zero line, turning negative, and then coming back up. And that next sell signal, I would actually, if that plays out in that manner, I'd be looking to pick up some spider puts at that point. So this trade of the week, I just want to focus on the spiders, and I don't know if that trade is necessarily going to trigger this week. It may need we may need to sell off and then rally back up, but I will go ahead and note we are making new highs, but then we are the oscillator here is actually making kind of lower, so it's rolling over in the face of this kind of sideways action. So I'm not necessarily looking to buy the dip here. I know with our members we're talking about what we're playing. If you're looking for strong things, you want to kind of, I think, turn to financials at this point. Biotechs are pretty strong as well. But right now, I'm really watching the S&P to see if we're going to get that end of the year rally, or if it's going to be kind of a fake out. We retest the next high on, if we get a cross back up, similar to this move where we kind of rolled over, crossed back up, retest the highs, and then we get to sell, then we would definitely be buying puts into the end of the year. So that's it for this video. Be sure to leave a comment what you think about this type of market here. I love to hear your comments on our YouTube channel, and don't forget to subscribe. Thanks again. I'll talk to you next week.